You are listening to ChartingWealth.com for Monday, the 23rd of May, 2016. Let's jump right into things. We've got a lot to cover. IYY, that is the iShares Dow Jones U.S. Total Market Index Fund. It's where we always start, and we always start on our two-day chart. What do we see going on? Well, we have the 4-hour chart. We'll go to the 2-day. There we go. We have good, clean down movement. We have the derivative oscillator. Well, it looks like it might have lost a little bit of its energy. It's hard to tell. It's almost exactly the same as it was on the 18th. We had the candle on the 20th closing on Friday. We have a good trend line trending down, connecting 4 two-day candles. We have the derivative oscillator, of course, in the negative. The MACD and the signal line are still diverging from each other and still moving down markedly since the crossover back on the 28th of April. Confirmed down movement on our big chart for the total markets, what we see here. If we go to our 4-hour chart, what do we have going on? Well, we have a little bit of a backup. We're not crossing over the 2-day trend line at this point. We had the crossover going down back at 4 p.m. on the 17th, and we had lots of down movement, up movement in the morning and the afternoon on Friday. Derivative oscillator still negative, no crossover yet going up on the 4-hour chart. Confirmed down movement on both the 4-hour and the 2-day is where we ended up the week as we go into the new week on Monday. Now let's go to the S&P 500, see what we see there. We'll start, as always, on the 2-day chart. Again, well below our 2-day trend line. We have the derivative oscillator, the same as it was on the 18th. We have that candle closing on the 20th on Friday. Lots of down movement. The bears were able to pull the market way down, all the way down to like $202.80. That is on the S&P 500 as depicted by SPY, an exchange-traded fund. Market ended up closing up, actually down at 204.59. So it had gone all the way down to 202.80. The bears were able to pull it that far down. The bulls pull it back up, still in the negative on our last candle for the week. So we see continued down movement since that crossover on the S&P 500 back on the 28th of April, just like the total market. What do we see going on the 4-hour chart? We see up movement in the morning and in the afternoon, still negative on the derivative oscillator, no crossover yet on the MACD, so confirmed down movements on the short and long charts. For the record, the total market was up 0.73% on Friday, and the S&P 500 up 0.62%. Now, where we saw the most up movement was actually in the Qs. What's the Qs? That's the NASDAQ 100. Doesn't look like a lot of up movement. We look at our 2-day candle. What we see, though, is prior to the second day of that 2-day candle, the candle was actually longer red. It's now back to a spinning top. We've had the NASDAQ sliding sideways since the 10th of the month. It has been dojis or spinning tops. So lots of indecision of what the NASDAQ's going to do. It is confirmed in a down move. Confirmed in a down move. Derivative oscillator's been losing some of its energy. That means going up toward an up move. That hasn't happened yet. And the MACD and the signal line are, well, they are getting closer. Yeah, the signal line's coming down toward the MACD, so it is closer than it was back on the 18th, but we don't have a crossover yet. Still a confirmed down move, but again, we look at the price movement. The Qs, the NASDAQ 100, been slipping sideways. Now we're going to go to the 4-hour chart and see what we see. Lots of up movement in the morning and in the afternoon. Green open box candles, crossover going up on the 4-hour chart in the morning. The Qs was up 1.09% for the day. So the Qs is going up on the short chart. But again, a short chart move does not make a long chart move. The 2-day is still in the negative. So continue to watch the Qs. We'll see. Maybe it'll retrace that back up and head back down strong. We don't know that yet. We'll just continue to watch. That's where we ended up on the Qs on Friday. Now, lastly, we're going to go to gold. Oh, and for the record, 1.09% is what the Qs was up. Gold was down 0.15%. Remember, gold crossed over back on the 18th. Same time the derivative oscillator crossed over. Almost always a good sign when the derivative oscillator and the MACD crossover together. We have found over and over again a very good sign for movement. Now we see that the candle that formed on Friday, that finished forming over the 19th and the 20th, two-day candle, big, strong, red down candle. When we look at our 4-hour chart, we can see that the 4-hour chart crossed over on the 18th about the same time that the two-day chart did. Doesn't happen a lot. When it does, it means a big nosedive. We don't see a backup yet, so there's no entry point for gold. We'll continue to watch. Gold has been squirrely over the last few months since our beautiful 4-hour chart ended working for us back in December. It was so beautiful there for many months. You could just bank on the 4-hour chart like putting gold in the bank. It worked. Then it stopped working. Something to remember. Things work on the charts until they don't anymore. So you use them until they don't work. Then you find something else that does. Or if nothing's working, you just be patient. Remember, first rule, don't lose money. Second rule, make money. That's where we ended up the day. On Fridays, we go into Monday the 23rd. Be sure to join us every day. We're about to record and put out our weekly review and forecast. Thanks so much for listening to us from chartingwealth.com. Hope you have a great week.